Hi everyone. Today to me was a pretty much, barring any kind of insane, remember anything can happen to the stock market, any kind of insane reversal. I believe that I've got all that I need to know about this market following today's session as we, fucking Windows 8, as we sold off on heavier volume today in the New York Stock Exchange, S&P 500, Dow Jones Industrial Average, and the Nasdaq. So as you can see here, the S&P 500 still basically consolidating its gains. Just recently put it back in a soft buy signal, but now it's obviously after today is back to neutral and seriously all weighing on our models as the heavy. The New York Stock Exchange stocks got decimated today. I got breakdowns everywhere on heavy volume in all my important high priced or leading stock scans. So things do not look good internally. On top of that, I got tons of sells tonight. So to me, this market is all but done. A major reversal higher will obviously change everything, but for a stock trending above its 50-day moving average, I haven't seen such a weak tape. Also, don't forget the advanced decline line did not confirm this most recent move by the S&P 500. And another thing to look at, high yield stocks just started to break down a little bit before, and I started to see that we're starting to see some major divergence between high yield assets and the overall market. And on top of that, the United States dollar index continues to strengthen. It's never good for the market post 2000 whenever you see all this happening. So it appears that we have something serious going on. The volume on the Nasdaq was extremely huge today on the reversal. I don't care that Twitter is up. I think it's 25% after hours. That's one stock, just like Facebook. Compared to all the other stocks that I have breaking down or post earnings not doing so well, it's just too much to not pay attention to. So you'll see here as we consolidated here in April, you can see all the intraday tails. You can see all the weak open and strong closes throughout the Nasdaq the entire way. April, May, all the way into June. Then we started to break out higher. And as you can see, bullish intraday tails, open price bars. Then come to the July top. This is when we start to see things dramatically change. We start to see strong opens, weak closes, as you can see buried throughout here, and or whenever we do have a strong day, we don't finish near the highs or go nowhere, i.e. churn. Here is our only strong day out of any of the days, and this is why it looks so good, because we just had a pretty significant sell-off the day before. The fact that we reversed it so strongly and closed so strongly made the market look like it was back on solid ground. However, once again, here we go again. Not going anywhere on the index on an intraday basis and closing weak, refusing to ever close strong. Above average volume, and even on these down sessions, volume is about average. So this is churning. This is not positive action. You can see the New York Stock Exchange. Remember what I was saying before. Look at all the open body bars in the intraday reversals. April, May, June. Look at all the open body bars. Now look at us here. We have dark shaded bars and bars with barely any open bodies and just a ton of days where we go nowhere, but on higher volume the very next day. If after going nowhere you go nowhere on lower volume the next day, that's always good. But as you can see in these past 3 days, volume is increasing each day the past 2 days. So overall we have churning. Until we break though below the 50-day moving average, there's no reason to get bearish. So like I said, I'm not bearish, but I got red flags everywhere, so I'm prepared for the market to sell off. That being said, since it's near the lows and we're getting a pretty good signal, I'm going to go ahead and put 2.5% of my account capital into SPXS. That now adds it to our SOXS long position, our put position on SMH, and our long position on SRTY, put position on the Russell 2000. So we'll be going in for puts and a long position in the IRA on SPXS based on the market weakening. Now you might say, aren't you also long SPXL? Yeah, but from way back at better levels, like back here in May. So it's not a really big deal. We've been long SPXL for a long time. This is almost like a hedge. But we also do have a long signal in HMC. Honda Motor Company announced very strong earnings. It's Asia related, and as you can see, Asia still looks great. That's CHXX. This is yen. These are Chinese related. Here's Hong Kong. Here's South Korea. Looks a lot better than our market, doesn't it? So that's where I want to focus. HMC, though, is a little extended short term for a big 2.5% up day almost. So my limit orders are going to be around the 35.75 level. If it closes below 35.50, I'm out with the weak market. Market strengthens up, I'll use the 50-day moving average, my final cut loss. New traders, you probably shouldn't be trading here if you're not comfortable with the short side. This isn't a ripping bull market, so you shouldn't be trading the long side either. So if you are a new trader, I don't recommend taking anything. Keep cash on heavy and wait for everything to be lined up on the long side before going long. Before you go short, you should make sure that you know how to properly make money on the long side. Full sells, Hun, closing below the 50-day moving average, rolling over on heavy volume. Too bad there's earnings in the morning, so let's hope or strategize that we get out with a good fill, that it doesn't gap down too much. Even if it does, we'll be leaving with probably a flat to tiny loss, even if it does. No big deal. Why I think it's going to happen is because CL is finally fully failing. We've already gotten out of over 80% of the position, so we're going to have to sell the rest for a small loss, but it was worth it to see if it could bounce. CL could not bounce. Kate, it's moving back into the intraday range, 39.38. If it ever started to move higher, I said, and ever came back into the intraday price range ahead of earnings, that's it. It's gone. 39.38 is where it cannot come back into, and sadly 38.68 means that we're back into the intraday price range. Earnings are still ahead, so Kate is a full sell. WAG is a full sell because now it is making lower lows and lower highs rolling over, and its brother RAD is already breaking down on heavy volume. There's no reason to not think that WAG is going to follow suit, so WAG is also a full sell. And LJPC, once again, it's holding above the final cut loss signal, but this is a speculative stock with a beautiful short-term chart pattern. I needed to see this thing rip higher immediately. It didn't. We sold 25% right after day one. Started to act right afterwards, but today's gap down is a full sell. I also got 25% signals. There's a lot of sells. Like I said, RHP, HST, and IMO, 25% sells. CBG, 50% sell. Confirmation heavy volume sell off below the 20-day moving average. No good. And FDX with this, I think they've been shipping drugs. UPS settled and they got whacked. FDX did not settle and it's still holding up, but I'm not going to take my chance. We'll be getting out of another 50% of that position, and we'll see how the rest of it acts. I'm still long from back here, so I still have a 10% gain, so I don't feel like I need to sell all of it right away. So that's all of our action we have to do. I have to show you some more weak stocks today. CWEI continues to sell off. GTech continues to sell off. THRM, iRobot breaking down. But I mean, I just saw action like this everywhere. I'm just going to start throwing up charts up here. And I just want to show you, it's just basically the same thing I see everywhere. Failure to break out, failure to hold breakouts, reversals, red bop everywhere. So it's just not good. It's not very bullish. And when you have starting to have a lot of charts that look like this, you can be certain that something isn't exactly right. Now, I know that we have stocks like Biogen and Facebook and everybody holding up, but you know what? We're going to have to clear out the earnings season. Like I said, I'm going to have to see the NASDAQ rip higher, the New York Stock Exchange rip higher before I believe we can move higher. These indexes are just starting to look really weak, and this pattern since the beginning of July has screams of churning. Thank you.